You know, young rich niggas.
Welcome to this webinar. This is a COT webinar. COT stands for Commitment of Traders. This is a report that is issued by the CTFC every Friday afternoon. And CTFC stands for Commodity Futures Trading Commission. This is the commission that regulates all the trading in the US markets. So the report is based on data up to the previous Tuesday. So it is usually 3 days late by the time it is released. And you can find this report on the COT website. Just go to search Commitment of Traders, the very first website. You can see the latest announcement was on May 2nd, sorry. And scroll down. Up to where you see the heading, the current legacy reports. So under futures only, what you're looking for is the CME, or the Chicago Mercantile Exchange. This is the biggest exchange, so this is what we look for. And under futures only, look for the long format. Scroll down to find the currencies. And the currencies starts with the Canadian dollar, the Swiss franc, Mexican peso, British pound, all the way down. And this report is so complicated and full of jargon. But what you should focus on are just a few things. Now let's take the British pound as an example. And on the very first column, you can see here the open interest. This one is the total number of futures contracts which were open when the data was recorded. That is the previous Tuesday. As I've said, this report is usually 3 days out of date. So this one is equivalent to volume that we see on our charts. And when I talk about volume, I'm talking about this volume down here. So in the futures market, you have a way of seeing the volume and whether it's increasing or decreasing. And this is by looking at the open interest. As you can see, in my COT analysis, the very first column is the open interest or volume. And when it comes to open interest, the key thing is to look at whether the volume is increasing or decreasing and compare it to the previous reports. So for the pound, you can see the lowest volume we had was on March, the third week of March. It was at 190,000. The highest we had was on April at 231,000. The latest report, that is last week's report, we had a volume of 231,602. And this is the volume that is in my report. So the key thing here is to compare the volume to the previous volumes and where we are. Is the market currently having high volume or low volume? And we can also counter check this with the volume in our charts. So the volume here, you can see it was high. Now the second thing you should be looking at is the non-commercial traders. This is what we should be focusing on. Because these are commercial hedge funds for themselves who hold positions for their clients. So these are large professional groups who trade very large lot size or contract sizes. For the commercial group, these are just large banks who hold positions for themselves or the clients, and they are not in the market for speculative basis. So they don't buy to join the trend. They are simply buying or selling to hedge their clients against currency risk and transitions for the goods and services in the futures market. And finally, on the final column is non-reportable positions. So these are traders just like you and me. And these ones, they are generally wrong. So in these all reports, ignore everything else. What you should be looking at are just three things. First thing is the open interest. Second thing is the non-commercial. And under the non-commercial, we look at the long and the short. So that's it. So the weekly data on its own, like this week is the British Pound, CME, Commitment of Futures, Commitment of Traders Futures only on May 2nd, 2023. And you can see, okay, we have the open interest, we have the shorts and the long. You can see the long are more than the shorts. But this weekly data on its own doesn't tell us much. We need to build a picture of the changes in the data week by week. So this is how I do it in my own spreadsheet. And you can see on the very first column, this is the data from the beginning of the year. January, February, March, April. The latest report was on May. The second column, we have the volume or the open interest. This is where we see whether the volume is rising or falling. And we compare it to the previous volume. When you look at this column, you can see there is one that is highlighted in yellow color. And there is another one that is highlighted in blue color. So yellow color is for the lowest volume, and blue color is for the highest volume. So for easy reference, by just looking at this column, you can compare the last week's volume, and you can see it's almost the same as the highest volume for this year. That is for the pound. So on the second column is where we have the net long or the net short. And again, for the colors, you can see if it's net long, it will be, if it's net short, the color is yellow. But when the sentiment starts to shift, they are highlighted in blue. So you can see from April 18th, for the last 3 weeks, sentiment in the pound has shifted from bearish to bullish. So anytime there is a shift in sentiment, you'll always see a red. This is a red alert showing that the sentiment has changed. So back to this first column. If we have a currency that is rising and the volume here, if we compare it to the previous volumes, is falling, that tells us that there is an anomaly in the trend. And now we need to go to the charts and try to do more analysis. Same case, another point is if we see a large build up in volume, that is volume that is increasing week by week. As you can see, for the pound, from the second week of March, we had 190, 193, 190, 199, jumped to 224. That is in terms of thousands. Then to 25,000, to 24,000, to 31,000, which was the highest. And then we had 231 again. So these are a trend. Just looking at these figures, these are large build up in volume. Volume is increasing. You can see that this is an uptrend in terms of open interest or volume. But if we were to look at the charts and see that the pound charts, despite all these build up in volume, there is very little movement. That now will be a signal, a very strong signal that the market is weak at this point. So if we were to look at the pound chart, can see the market recently just broke out, and the last few weeks we had some of the highest volumes, which was accompanied by a breakout at the 1.2450 level, and this is a point at which sentiment in the COT has changed from bearish to bullish. So according to the COT, you can see that the large build-up in volume has been accompanied by a breakout in the pound. It is a very strong signal to join the trend. The next thing to consider is the difference between the long and the short positions. To see whether the currency is net long or net short. And the figures you see highlighted in yellow or blue, these are the figures that you will usually see being referenced in the financial press, whereby they can say, for example, on April 2nd, the pound is positive, is net long positive 10.65. So this is the difference between the long and the short. So for the latest figures on May 2nd, the longs were more than the shorts by a net positive of 10.65. But we will go further back, a few weeks back. You can see the shorts were more than the longs. The yellow color indicates that it was negative 23.98. So the figures inside here are not so important. What is important is the total figure here. And anytime you see a yellow color, that shows that it was a net negative or net short. The blue color is a net positive or net long. So a single week's net long or net short does not tell us much. But over time, as you build a weekly or a monthly or even a quarterly picture, you'll be able to know whether the figure is low, high, or medium. So if we can look at these figures from the beginning of the year, the pound was net long by 20,000. It is on January 3rd, then 29,000, 24,000, 23,000. Then came on January 31st. There was a net short of 18,000. It reduced in the second month, February, to 14,000. And on April again, you can see there was the lowest at 14,000 and then followed by 2,000. Now that is where the sentiment changed from short to long. It's highlighted by this red alert. So this is the point that I should have started paying attention to the pound, because this is a point where sentiment changed from bearish to bullish. And indeed, if you look at many of the charts for the pound, you can see there is a breakout. So for the pound dollar, there is an uptrend here that is accompanied by a shift in sentiment in the COT. So any breakout above 172, it will be a confirmation for that uptrend. So if the currency is strong, this is another thing to pay attention to. If the currency is strong and we have an extreme net long difference, that is the net longs have been dominating, and for some time we can see that we have the highest volume, and the net long difference is at its extreme, and the volume is moderate. This could be a signal of a turning point in the market from bullish to bearish. So if you look at the euro report, see from January, the net long, the euro has been net long since the beginning of the year. So you can see this the blue color all through. But the last week's report, we had the highest difference in the net long at 173,000. You can see the previous weeks, there has been a build-up from March at 139, then 144,000, 145, 143,000, 163, 164, 169,000, and the latest at 173,000. So you can see the volume, the net long difference is increasing. So at some point, we are going to see an extreme net long difference. And that will be signaling that the market is nearing a turning point. Of course, that will be accompanied by, especially if it is now accompanied by low volume, shows that there is extortion on the side of the bulls. So same case applies when a currency is weak and we see an extreme net short difference. So for the yen has been net short all through the year. We also have NASDAQ. So if we see an extreme net short difference, and especially if it is accompanied by falling volume, shows that the bears are reaching a point where they are struggling to push the price lower. So the key thing is to compare the difference here with the volume. If the volume is low and we have an extreme net short difference, that could be a signal for a reversal in the market. So if this difference again is low, for example, for the CHF, you can see since the beginning of the year, the CHF has been net short. The blue color or through 28, 2800 was the lowest net short, and again we are back at the same net short difference among one of the lowest. So for the CHF, these could signal that we could be headed for a period of consolidation. Because this shows that the sentiment is neutral. The professional money is neutral on the CHF. Because the net short is low. Almost the same as the lowest it has been, which was on January 3rd. So another interesting thing I've found is that in the stocks, in the latest report, you can see there was a very large build-up in the volume, especially in the NASDAQ and the S&P 500. From the April 25 report, the open interest was 49,000, and on May 2nd, now that jumped to fivefold to 55,000. And as you can see, there has been a shift in sentiment on April 18th from bearish to bullish in the NASDAQ. Again, this one is accompanied by a very large build-up in volume. So this could be signaling a bullish trend in the stocks. But for the NASDAQ, for the S&P 500, again, you can see the volume on April 25 was 453,000. That again jumped almost fivefold, sixfold to 2.3 million. And we look at this difference here. The net short difference is at the extreme. So if this one is accompanied by a very large build-up in volume, and we have an extreme net short, this one is also a signal that we could be nearing a turning point, or the market may be now turning or continuing the bullish trend. So this is how we analyze the COT report. You will need to build historical data for more detailed analysis. Of course, that is a lot of work. So every week, however, I do an update. And the most interesting thing about the latest report is the pound and the NASDAQ. Of course, next week, if there is a large net long difference in the pound, now that will be a confirmation for joining the bullish trend. Although even as it is right now, the pound has broken out. The next week data will provide the opportunity to join on a pullback. So I always do an update on the latest figures reported and compare them with the previous weeks and months, because these are from January 2023, and it's for the non-commercial only. So I only focus on the non-commercial data because these are the traders that buy on a speculative basis. So you can always find my update on my YouTube channel. Subscribe for the weekly COT updates. Thank you.